Hmm. Hmm. Well, let's take a look. Yeah, I figured as much. Really nice bounce play there. 32%. It's like anything, though. I think you have to just wait it out. I don't know if I'd touch it. I exited a lot of my position beforehand. So KODK, like Kodak? I don't know what that is. Hey, good morning. Good morning. Maize and Blue too. Cannon Fodder. Good to see some familiar faces. Yeah, I'm a little bit surprised. A little bit surprised about GME this morning. Let's take a look. I really don't think there's much to say here. I mean, it's higher than average volume, I guess, but if we do see anything, maybe we'll see like a pop right above here. That's pretty far. I would be surprised if it went all the way there, but it's not impossible. I was kind of looking at this target before the whole thing crapped out. The weird part about this setup, and I'm just get us warmed up this morning. Don't If you're not interested in charge point, don't worry about it. But this one, what was interesting about this one was like it actually had a pretty decent formation on the bottom. I didn't like that it made a lower low after a perceived selling climax. You see the volume right here is really high, and this volume is really low. So there was a lot of effort put into this bottom, and that's more like a selling climax where you have peak volume push down, but then like afterwards it has this auto reaction and then it drops lower again, and that's typically not a good sign. However, like normally what's been happening is that you get these reactions back to the upside, and it does have a really nice wave reaction. So I was like, well, this is pretty typical for charge point, well, really for anything in the market. So I felt like this was fairly predictable in terms of that reaction, where there's a rising, you can see the support and resistance right there on the drop. And that trend that's built out, and this ends up being where it kind of comes back up and tries to go. I think what surprised me the most was coming over the top. And looking back on it, this is certainly more distributive. I didn't really think it wasn't distributive. I figured it'd come back down at least to the floor, which at that time was not $11. But it has that kind of push up and then it immediately makes the lower low. And you can see that spike of volume. So this is a sell-off, but it is possible. Maybe not as likely as some, but it was certainly possible. This could have come down to like this $11 mark. And it did. It just kind of hovers above it. Doesn't ever get down there, as you can see. It's not impossible that this could have made a higher low and then tried again. But I think that on the whole, looking back, when they announced that there was a split, they did so in this region. And you just have to sort of take it for what it is, which is that this sets up a weakness, gives it room. I don't know if they knew that ahead of time or if this stock is just really struggling to find any kind of footing, which seems likely as well. But ultimately, this is just then distribution. So the question is, like, is there even an ounce of hope that this has some kind of a recovery? I think the answer at this point is probably not back up here, not back to $20, not like that, which is unfortunate because if you looked at this right before this split happened, their price targets were pretty universal. They weren't way off. This was roughly about $1 right here. It was right around here or something like that. It never quite got back above $1. I don't remember if it was here. I can't remember now. But most of your price targets were actually up here. They were around like $2, $2 to $3. So, all that being said, is this one that you should touch? I think as again, reactive plays, these can be fine. I think beyond that, you're kind of pushing your luck until you find something more stable. So I wouldn't be touching it until or unless it creates a, maybe right here, a jump over that creek coming down, which looks also like the moving average in the 4-hour. So this is a busted play. I exited about 2/3 of my position with a pretty significant loss on last week. Basically on announcement that they were going to do a split, I was just waiting for an exit. So charge point's not one that it's just a loser. That's all there is to it. I picked a loser. I don't know what to say. And not in a mean way. It's just didn't recover. And then they just decided to split it. So you never know. Reverse splits in general, they're not, reverse splits specifically, they're not technically like bearish, but it's a perception thing, right? So if the market perceives it as like, well, this stock is struggling, it can't even get up above XYZ level or whatever, then yeah, certainly it's a perception of bearishness. In and of itself, it's very neutral. It doesn't do anything if you think about it. It just puts them into compliance. So perhaps, maybe, long term, we are seeing like this kind of bottoming on the trend. I'd already kind of thought that might be the case. So I really wasn't particularly bearish on this on the whole. That's what I'm saying. Like the way this set up down bottom, I figured it was ready for a bounce. And also like waveform wise, it looked pretty good. Like it looked like it was ready to kind of come back up. This wasn't astronomically high levels. So it wasn't like I was calling for moonshots here. I was really looking at like $3 or $4, and that was a max. And it still had never come back up to this level. So is it possible that this still happens? Yes. But I would suggest that you play it long term like a fundamental play and not short term. That's just my 2 cents about that. Yeah, IWM, I'm not particularly worried about the market on the whole. I think that you have to just sort of take into consideration maybe the extension of the market as it's been going up. I'm trying to remember where I put IWM on my charts. And being that it already made it to 220s, that was my original target here. And I didn't really think it was necessarily going to break above here. The thing about this setup with IWM, I know this is messy, but I really did have this as my higher target, like this 220 area. The thing about IWM, which is their small caps, is they were already pretty wildly behind. And they've roughly the whole time been behind. Let me get rid of some of this noise. This is pretty good. And I wasn't sure what was going to happen when it hit the top here. So there was like a series of widening targets. And you can see like the topmost widening target might even be up here at like 235. There's a perceived widening that begins right here. So this is more of a Bukowski target if you're looking at a widening right there. It's a bit of an odd setup because there's 3 hits on the bottom. There are 3 hits on the top, and then it breaks out. I think it's a little weaker for whatever reason. I'm not really sure why I think it is. I guess it just feels a little weaker to me. So I wasn't sure if it was going to get up there to 231. I think because sometimes when you perceive a pattern, if you're not really sure, you kind of have to just take it with a grain of salt. Like sometimes a widening or a narrowing is super obvious. And then other times you're kind of like, like this one bothered me because the top wasn't easily perceivable. Like I guess it was this guy at 210, and then it sort of reacted down, which was expected. And I even had that in the crosshairs. I mean, it looks like I, again, came back and like fudged it, but I thought it was going to hit that mark on the side, and it definitely did. But even still, I didn't really feel like there was much of a strong hit there. So this breakout's fine, but not like what I was expecting, I guess. I thought it'd be a little bit more of a sturdy hit on the top. So it's just really weak. Like kind of tapped the top, backed off, then jumped it real quick. Looking forward, I think long term on small caps, I had thought that this drop could be a big picture SOW. And I believe that comes from looking at the two previous bottoms here and here. So one is March 2020, the other is November 2023. So those were the two lows that were made. I would still say this is a decent spring, and then it has a sign of strength here and pushes up. This is just then a backup of sorts, and it did come up very, very close and then backed up. So, a lot of noise on the chart right now because of my lines and junk. If you turn those off, you can see it's a pretty classic M pattern. And so there's not much else to like speculate on here. I think it's pretty straightforward, to be honest. But there's also a lagging behind. So in an environment where you've got uncertainty about import-export costs because of tariffs, I think that your smaller companies are typically going to be a little bit more... I mean, I think it's kind of common sense. I don't really feel it's... Like, I'm even saying it, I'm like, you probably already know this. So it just seems like that would be the way that it would be. You'd have like a weakness there in small caps. So really struggling to kind of get back over this all-time top. I see this as a backup, at least for now. I don't see it as a distribution. But, that being said, we have to kind of just, again, take it for what it is. I had let me see, I had a parallel on here. Let me see if I can get back. That I thought was pretty accurate. Let me get with the weekly. Yeah, and so here's where I'm going to make a suggestion. Because right now, the market's in a place where there's a lot of scared money. I think a lot of folks, they're just riding the wave. And there's some people out there who are very, very bullish, and they're basically like, well, this is, like, people really don't like this rally because they thought it should have gone down more, so on and so forth. I'm of the opinion that I think we're riding up on a sort of not a whim, but like, I don't know. To me, it reminds me of what happened after COVID, where you started getting these valuations in the market that were like way beyond like the normal. So most things trade way ahead of their valuations, like 30, 60, 100 times their valuations. That's normal. It's future tense. But when we got to COVID, that number became really bloated. And I think that's why you had some folks that were just sort of taking profits early and leaving with the expectation that, yeah, this could go bad pretty quick. So it looks like there might be two. So this is like a longer term trend. It's not always held up. There might be a steeper one right here. It looks like there is. So kind of stuck between two spots. So what I'm going to do is, in order to avoid having this drawn out, well, we'll just do that. We won't add a bunch of other stuff. I just won't add anything else. Yeah, so one of my bigger concerns right now, so we're in a pocket of resistance right here going into the top. It's triangulated pretty well with these middles, and then on the tippy top you have maybe 380 to 320, but depends on when you get there, I suppose. So there's certainly some resistance here and here. I think that was pretty easy. You didn't even need to draw the trends, but you can see like last time it grabbed onto this one and then failed. Then we're coming back up. So I'm going to use that one instead. It seems like the market wants to try to keep this steeper trend. And then, yeah, see, this is what I was wondering about. So there's a, wrong one. This is a little bit of a stronger channel, or a stronger trend line. So there's certainly a dip here, don't get me wrong. And you can take that out, and that's valid. There's nothing invalid about it. But I'm curious because most of your supports are right here. So again, once it bounced out of that spring-like motion, it goes into this almost parabolic motion. We finished the S-curve there up to the top to all-time highs. And then afterwards, yeah, this looks like that head and shoulder. I don't know if you can see that very clearly, but there's a little bit of a shouldering right there off that line. Resistance and then support. So I was going to say is there's a little bit of a danger here in that when you get back to that all-time high, you can see why that's a problem. You're now running into kind of multiple spots of resistance right here. So this whole little block, I think, is going to be a tough one. I would say if IWM can get to 240s, it's a good place to like consider taking some profit if it can get there. And then if it breaks beyond it, then it's a good time to like really jump in because weirdly enough, and if you're just averaging in with shares, doing cost averaging or whatever, you probably don't care, but I don't think you're going to see a big breakout there unless the market gets some better news. It just reminds me of a hook, I guess what I'm trying to say. I'm a little nervous about that. So if that's a backup and it's not a hook, then it should come up here, smack this resistance, and then find support and then go. And it may not come all the way back down, but it needs to find support. And right now, yeah, that's the measure. You can see the, it's a kind of a genteel S-curve. It's not quite done yet. So it looks like it's going to try. So I think it might be a decent enough play up to 250 if it can keep the momentum. But like I think the money's trading pretty scared right now. So I'll be really nervous if there's any kind of bad news. And there's really no reason why this has to find support either. I'm just saying like November into next year, we might get a decent rally. So really what we're talking about is an S-curve into a larger S-curve, which is typical. So someone had asked about that in the Discord group not too long ago. They said, do S-curves sometimes form into bigger ones? And I said, yeah. This isn't really something that I even find very controversial. The only reason I don't assume this is because it's, first of all, it's not a good idea to assume that it's definitely going to do this because it's a bit out there. But also because in some ways, yeah, like you're basically making two assumptions, not one. First, you're assuming that an S-curve is going to sort of finish off, and then second, that it's going to build out and not form a top, and then continue again into a full 50-50. I mean, there's a lot of assumptions there. So this looks pretty tight. It looks like it's due for a pop maybe in August, if it's going to go. And then roughly August. And then I think if you're going to have that sideways action, now would be the time. So what would that look like? Probably, without guessing too much, probably using that previous top from March 2021 as a support. And again, it could take some time. What I normally do if there's a double S curve, and what I was saying about that is that like that's pretty normal. Like you usually have within an S curve, like you're usually going to have two different ones. So sorry, I was going to demonstrate what I meant by that. So usually you'll have, and that's, I think when you look at GAN-based stuff, that's where a lot of that comes from, is splitting the move into quarters, like 25%, dividing it by 1/4. So you see the double S curve here, 1, and then it fills out a bigger one, 2. I'm just using this as an example. This is very typical. So usually there's both, right? And each one's roughly equal on either side because it's, again, halfway. So I was going to show that, but then I didn't show it. So if that were to recover in a similar way, there might be a comparison there that could be made. And you could say that we don't necessarily know where the middle is yet, but once you did know where that middle was, then you would have potentially like another cross, and it may even be already drawn out. We'll see, because again, hard to say. This could drop, pop up, drop again, yada yada yada. But the widening is usually what I look for. I look for that cross, that middle. So if this is it, and it's possible, then this could give you an idea of like a long-term target for end of the year up at like 326. And the main questions that I always ask are the same, which is, if it breaks out here, does that make sense? Yeah, it makes sense. That's a previous top zone. That's exactly where we identified probable resistance. It's not as high as maybe you would want it to go, but when we were looking at those other parallels, that's where the other one was. It was like right there at 325. So 325 seems pretty reasonable. But in the meantime, I would just be watching on small caps really carefully. Like the region it's in right now, it just doesn't look particularly strong to me. So, yeah. Mixed bag. Yeah, I wonder if we're already kind of approaching that. See, there's like resistance forming right there. We're going to try to like push it. And this could play into that idea of the inverted head and shoulders, if you like that idea more than S curves, because you can see like shoulder 1 here, shoulder 2 here. So then you'd have shoulder 3 kind of on top of this mark coming down. The only thing I would say about that, it doesn't really guarantee any kind of specific movement beyond maybe this final push. So that's like 300. 295. So it's a bit of a widening shoulder, I guess. So do I think that IWM, which is your small caps, could be between 300 and 320 by maybe next year, early next year? Yeah, I think it's possible. I would say it's probable, but I just don't know if you can count on certain things happening. Like that definitely doesn't have to happen. And there's a, so if you're long-term bullish, I don't think it's really a reason to be scared or anything like that. I'm just saying like that this isn't guaranteed. And that's just kind of like everything in the market. I would suggest this jump right here, probably the most significant, just as a breakout again. And I think this is what we were talking about a minute ago. This could be perceived as a widening. I don't know if it's the best one. Like I was saying earlier, I just feel it's kind of weak. But if it is a widening, then it should be heading back to 240, which again, similar to that price target. Yeah, otherwise I would just watch stuff. This is the MFI you see down here. This typically is a pretty decent indication of strength, but it can rise on weakness, just like RSI can. RSI actually looks a lot better and it did come down, which we were kind of expecting. That was a long time ago. I haven't touched IWM's chart in a while. We may have mapped it out in order to see what was going to happen later, like after this drop started. So I probably didn't predict that it was going to drop that far, but that I'm just cleaning up my chart. So this has this kind of, again, appearance of like, oh, it's going to bounce and maybe keep going. But I always go back and I'm just like, all right, where is the main support? There's one that's kind of low right here. That's where we're at right now, which again, we were talking about maybe that's why we're hitting some resistance. There's already some resistance there. This is sort of the main one though. If you look back, this is where most of those bottoms are on the RSI. And that actually looks more like a curve here as opposed to a straight line, which is interesting. It looks more like curvature, curvilinear. But yeah, that again, that's right where it's at. So it really needs to have like a breakout moment. I think when it does, if it does, it's going to have a really nice push. I can't imagine why not. Because if it breaks that motion right there, I think it's going to be a big push. Probably more of a singular or multi-day, I guess you could say, move. It's like one of these bigger pushes that you see on the chart, which most of them are about the same. That's about a 10% move. Yeah, about 10% maybe. That makes sense. And that's about, 11% is how I measured it. But you measured it 10%, gets you right back to all-time top, 247. Tesla has been a weird one. I'm not bearish on it. I think that on the whole, Tesla looks fine. It may seem really bad to some because of that big drop that happened. If you're following it last week during earnings, Tesla dropped really far after earnings, like 10%, because I actually don't think there was anything surprising about that drop. It was just like they talked about how Tesla might have a rough few quarters, and then they already knew they were going to miss year over year. So that was sort of in the bank. I don't really know why the reaction was as strong as it was. They still beat expectations, not by much. Very slim margins, less than 1% each. So, I bought in at the bottom. I've already sold some, but then I'm kind of just waiting on the rest. I think that Tesla's in an interesting spot. I did a long-term chart on this on my own time last week. Tesla's got a macro S-curve building out. That's pretty huge. And I went back and I checked and double-checked and triple-checked this in different ways. And this is what I came up with. And I think that it's correct. I don't think, and I couldn't say for sure, I don't think I could tell you what happens after this just yet, because there's a sense in which this could be like a macro cup and handle, like a big picture cup and handle right here. And you can see with the volume, it looks like it is, because you're like, well, that's a huge amount of volume on the opposite side. But I do wonder, there's a strange sort of, I don't know, this is a really weird looking chart to me. Now, it would be good if most of the volume came before the big move, which would be expected if that happens here. This thing could certainly go rocketing to the moon. Musk said something like he thought it had like a $30 trillion valuation or something ridiculous. Don't quote me on that. He's talking about robo-taxi and AI stuff. He's not wrong if they execute it well, but the problem with Tesla is that they're really big, and I mean this sincerely, they're really big on promises, they're really light on execution. Like they almost always say like something like a huge number, and then they barely even get close. Like one of them, for example, was this robo-taxi launch. He said, well, we're going to have them in every major city, basically, because he was saying they're going to have X amount. You have to have them in every single major city in the U.S. this whole year. And I'm like, well, it's not impossible, but that's a huge task. They said something similar about their AI robots that they were making, and they said they were going to have like thousands, and they only have like a few hundred. I mean, it really is that dramatically different. So they hit these snags, and then they just don't execute. Concept-wise, has he done a lot of stuff that he said he was going to do? Yeah. I mean, you look at SpaceX, you look at the efforts being made there, the technology-driven efforts. The AI he's behind on for his own reasons, and now he's getting caught up. Is Tesla positioned to become one of the leading AI? Yeah, I think so. I mean, it could be that simple. So I could certainly see this as a stair step up into like a cup and handle top, in which case this thing could be flying off the shelves before too long. I mean, realistically, does it seem like that would happen? Is it going to go to $1,000? You know, I don't know. I can't really say. I think those are not really the kind of guesses I want to make. As an S-curve, I actually think this is basically done when it hits 450. So I went and did this like multiple times. Again, I checked, double checked, triple checked. I looked at short term, small term. And what I found is that there's a pretty tight setup right here where there's this bottom and then it looks like a flag. If this breaks out in an S-curve, and I found a really simple one, it matches that target. There's a small range between August 13th and the 20th. That I'm looking at 450. There's a gap there. It's 450 exactly. I didn't pick the high or anything like that. I looked backwards at why that number might be, and there's a gap right there at 450. And it is where this widening again on the downside sort of begins. If you look at that as a widening, not a huge fan of that, but it is a spread. You know, it is widening out. So, I mean, you could say maybe it's a widening spread and that this is the breakout of that widening spread. It needs to jump above 342. So I think if it gets above 342 here on this reaction, there's a good chance this is going to be flying. And I mean, we're talking about the next 2 weeks. As a wedge, this did not break down out of its wedge. Now, I don't have the wedge here. Again, I was doing a lot of different stuff on this chart, but mostly just working with this as an S-curve. And I think this S-curve is really nice. I don't see it as controversial to me. And again, it's pointing up and it matches the macro S-curve, which is like 450. Again, could that be a breakout zone? Yes, it could be a huge breakout zone. It also could just be another top, you know, UTAD of sorts. Arguably, could somebody make that argument if they're bearish? Yes, because when it found support, you know, it found support pretty low at like 210. When this comes back down, it comes back to like 210. I mean, 210 might be the support, but ultimately when it breaks out, it's a little bit higher. It's at like 240s, and that's where we dip down into on this retracement. So we'll see. I think you could make an argument there's weakness there, potentially. I don't see it like that because of the volume. I think that the volume shows that there's a lot of, I mean, it's a high volume bottom, so it's hard to say that that's really weak. As opposed to, you know, what we were looking at a minute ago where you have like a selling climax and then another low. This has a really high volume second low. So I find that to be a bit encouraging, but anyways, this is a consolidation. It didn't break that triangle down or up. It actually has narrowed right here. It's kind of tough to see it without just kind of doodling it. But I think I got rid of it on the chart. The recent top and bottom didn't actually go to, you can see right here. And I think this is the main reason why. It's because they weren't looking to break out. Right there. Yeah, it did looks like it hits the bottom, so never mind. But you see how it didn't come above that top? But I think the part of the reason is because when you do the creek, that would have been a breakout of the creek. So they're avoiding going back up and doing the 1, 2, full 3. So it looks like a 1, 2, 3. Probably somebody looking at it would say it doesn't matter. It's 3. that instead stopped short of pushing the creek and then dropped down, hit the bottom. So now there's been 3 hits on the bottom. What's the deal with the 3 hit to 4 hit rule? Is that a real rule? Actually, yes. So some people would say that that's not a rule. That's just something that came out of, so and so talked about this thing and it just happens every now and then or whatever. But there is a bit of a rule to that. If you look at Bukowski methodology in determining breakout patterns, 3 hits and then a move is very typical. So you usually buy or sell on the 3rd hit. So it does actually have legitimacy in terms of how often that does yield like a bigger move. So anyways, so is this pretty strong possibly for an upside move going into August? Yeah, it's pretty likely. So I'm holding it. I'm not worried about it. Apple and Google are a little different. They're looking a little weird to me, but GME and AMC says Unit 12. You put it on the thing, but you're not talking about it. I like to get through the early morning stuff and then move over to those. So you usually spend a lot more time on those. Yeah. I think it's important to know where the market's generally going. I'm not avoiding them. I talk about them way more than most, and I think it's almost unhealthy. So we're going to get to it. Don't worry. This setup right here, and I'm not going to spend long on it. This really bothered me because Google had a really killer earnings. There's really no reason for it to be dropping, but it is what it is. It has a bit of a weakness in the setup with the RSI. I'm not really sure what's going to happen. There's a consolidation here. To me, it obviously looks bad because it's selling off now. It had multiple push-ups that just failed to advance after the initial push. So I'm a little bit irritated. I went and traded this, and I didn't get out of my full position here because I thought, well, it may back up and go again. But really, it's looking kind of meh. I could definitely see it coming back down. There's a gap down at 186. It's got some build-out problems. So unfortunately, Google, even though it looks pretty good, I'd say probably better off waiting for like a really sharp bottom, and we might be getting one right now. So it might be a good time to buy in. But a really sharp bottom into oversold territory on like your 15, 30 minute, and then see if it has the ability to break out from there. And you can just use the outermost if you want, like that. So if it has a sharp bottom and then breaks back above like 195, it's probably going to go. And if not, if it gets stuck here, then I think you're in trouble. So you really want to see that push. And if it gets stuck or hung up around 194, I wouldn't even bother. So if you're surprised that AMC's dropping, I don't know why you would be, and one of the reasons I took a break last week, a big part of the reason is just like wanting to be with, family and stuff. My kiddo was at summer camp a lot and then came back and I wanted to hang out with him and all that stuff. But also, like, I've had some less than great trades in the last month. So part of that is just not listening to my own rules. And then also, so like you develop these rules to keep your positions safe. And then if you stop listening to them, you're trading on like emotion-based trades or just, hopium-based trades or whatever. Impulsivity is really the right word, because it can go either way. Impulsivity is not always bearish. It's not always bullish. You can get in this sort of a losing cycle, right? Like a negative cycle where you're just kind of going backwards into old habits. And I started finding that that's what was happening. I was like losing one trade after the next. And I had really good start to the year, really good kind of mid-year time period. And then we had obviously the really bad stuff that happened in April with the drops in the market. But largely, like, I've done an okay job recovering, not terrible. But then lately I've had a really big struggle with that. So I was trying to go back and look at just sort of back to the basics, candle patterns, standard breakout patterns, looking at indicator, TA, things like that. Basically trying to brush up and remember, like, these are the reasons why I trade the way I trade. And then one of the big things that struck me as kind of the biggest reason why, I guess, I tend to have losing trades is that I'm in them too long. And I was just talking about that on Google. Like, I had the trade, I made money on it. I could have just exited the whole position. And for whatever reason, I don't, because you think that it's going to have this secondary move, but you don't know that that's going to happen. So you're kind of just banking on something that may or may not happen. But the fact is that the profit already happened. Like, I could have just taken the money and run, but I didn't. And that's not a good place to be as a trader. I think you don't want to ever be in a position where, like, it's better to leave money on the table and have profit than it is to hold it too long and have it sink into oblivion. And that's always the better option, is just take the profit. Like, who cares if it goes up again? You had profit. Like, that's fine. Better to look back and say, well, I missed out on some profit, but I still had green, than to look back and say, I not only did I not get all the profit, but then I held it and it went red. So I've been finding that's one of the biggest problems that I've had. And that's what I was doing this last week. I was charting a lot on my own time, and I did look at GME and AMC here and there. But I took that time because about a week or so ago, maybe around July 17th, because it was this next push-up, there was a lot of people who were really tempted to kind of FOMO in this area and say that they were thinking this was going to go. And it's not impossible that it has another push-up. In fact, I was thinking at one point it may go ahead and push to near 365 to 370 again. It's totally possible that it comes back up into this pocket, pushes against this daily moving average again before anything else. But I gotta say, and I tend to be like, I try my best to not be like, hey, I told you so kind of stuff, because it really doesn't help anybody anyways. Like, who cares, right? If you weren't here, then you don't care. And if you were here, you're like, yeah, I was here, like, I don't care. But the idea of this, like, pushing up towards this previous top, we had mistimed it, like always. Like, it seems like everything's been really slow on AMC over the last couple of years. All this stuff has been dragged out. It's been getting, like, lengthier and lengthier. But the idea of this coming back up, originally we had it like here, that if this came down, it could, like, break back up again and come right back up to the top. And it might do that with a lower low, even though the on balance comes higher. And we saw that acceleration begin down low. And I don't feel that this is particularly, like, controversial or difficult to understand. When you look back at this, I did a video and I called it Springer LPS, right? And it brought some weird controversy with it because a Wyckoff trader, I'm not naming them, because if they're trying to just get followers or whatever, then I'm not going to give them the satisfaction. I'm also not naming them because I'm not in the business of, like, slandering other people's names either. I don't want to do that. So first, it's twofold there. So it's a win-win if I don't name them, because then I'm not, smearing their name in the mud. I'm also not, giving them more followers or something like that, if that's what their aim was to start drama. I was looking at this as a macro bottom, like a huge phase B bottom, with the push-up being a motion to start a spring. I still think that way. I still think that regardless of everything that's happened, that this always had the possibility to come down and push for the lower low. With this being a phase B at like 245, 246, that means you may not necessarily come back down below the floor, although I still think it's possible, if not likely. If long-term, we're never going to come back down to 240, if that were the thing. If we were never going to come back down to 240, we might make a higher low. The weird thing about this, if you're not following what I'm saying, is that that could be that we actually have a spring, but it only goes between 246 and 239. That's a very small area. But when we had a quote unquote spring, and I do think it was a spring, a genuine Wyckoff spring, in 2020, it barely dips below. And it doesn't come that far below the phase B bottom, but it barely dipped below the bottom. Long term, that could have proved to be a bit of a weakness, right? That testing of the liquidity. Hey, we may want to come back down here in the future. But at the time, it doesn't make a huge move. It's not dropping off the face. It's not what they call a terminal shakeout. So the controversy surrounding that was pretty much a non-starter. I have no idea what brought about that controversy, why that was even a thing. And frankly, like they were using a screenshot from GME when I was doing like a macro wave analysis. It wasn't even Wyckoff. So it was really confusing to me because they were basically saying like, this guy doesn't know what he's doing. You should never do your charts like this. And I'm like, yeah. I mean, if you're looking at that and somebody told you this is Wyckoff, look at this guy's Wyckoff, you'd be like, that's not Wyckoff. And you'd be right because it wasn't Wyckoff. I was doing a wave analysis. I don't just do Wyckoff. But I was saying that like in this particular case, this check on liquidity, if it stays high here, I think it's very similar to what we experienced here. This is an LPS. It hits a bottom, kind of selling climax, pushes up, comes back down, last point of support, and then it moves on. Locally, there is a spring in here, right? It dips slightly beneath the rising trend. There is a dip in here. It dips slightly beneath the previous low on the day before it moves. But on the whole, like that would not be called a spring, right? And then here, it's the same thing. If this doesn't come back below 3, I'm not going to call it a spring, right? You can have, much like what we did, we were just talking about this on Charge Point, you can have this be just a higher low right here. And that's just an LPS, last point of support. And technically, if this is the floor at 293 or 295 or $3, whatever you want to call it, then this could be thought of, I guess, in some ways as a spring, but I don't think it's a spring. Like I think this is the phase B bottom, which is what I was saying in the video. So when I did the video, I talked about consolidation here around and above 3 as a possibility that is indeed where it stops. It doesn't go farther than that. And we get almost like a copy paste, but it's a lot bigger, right? With what we experienced last time. There's an extreme similarity in the way this is building out on the bigger picture. I don't think, though, that you could then conclude, oh, it's similar, therefore it's going to be the exact same. I don't think so. You know, if the question is why, then you have to answer the question why. We don't necessarily know the answer. We don't know why it didn't come back down again here. Well, there was too much buying. That's all there was to it. Probably. I mean, liquidity moves the markets, right? But we also don't know why it was at this particular time. And some people are going to say, well, we do know why. It was the options chain. Roaring Kitty talked about it. You just refuse to believe him. Again, that is technical analysis. Options trading is part of the technical analysis because the underlying principle there is, again, liquidity, like what's moving the market, right? Where is the money going? And then what is that manufacturing in terms of price action? I don't disagree with that. I don't. So if we were thinking about why, like that could be the answer. You could say it was because the options chain set up. For me, it's more about, if I look back at this, and I had kind of said this before, if I think about why, it's really because this needed to come back up and that this ultimately wasn't the end. So my argument for a long time was that this is not the last time you're going to be down here. And it took, I don't know how long, like a year, like a year to be proven right about that. That's a long time to just sit on an idea, not knowing if that's really going to happen. But I said, well, it probably is because they're going to come back, but they don't need it. They're not going to do it right now. And what that typically means is that you're building out a macro, like a bigger picture range. You're fulfilling a larger wave pattern. You're generating like, the shapes that we look for in the range. We're looking for those long-term accumulation, distribution setups, so on and so forth. Are we getting that? Yeah. I mean, you can see we've traded these two regions pretty much exclusively over the last couple of years. And if you look at those setups, they're definitely all in the same spots. This particular top, it's kind of interesting. This particular top right here looks very similar to this top right here on the big picture, doesn't it? I think it's pretty fascinating. And then this particular bottom looks very similar to this particular bottom. So could it yield a gigantic move at the end? Sure. But then we come to the question of why, and we say, well, why did we do this at this particular time and leave? If the goal was to come back later, then a lot of times, and this is one of those things that you just kind of observe in the market, they avoid going low. And I said the same thing when it came down here. I found this to be a very curious area because even in my own Discord group, which is great, I love that people had different opinions. There were a few people that said they thought it was going to go test all-time lows. And I actually said, I don't think it's going to, because the idea here would not be necessarily to make a new low, but just to come back and check those levels. And if you're going to make a new low, you'd probably do it after pumping up because you haven't yet made this back test. That's the whole reason I thought it was going to come back to 4. Yeah, the waveform schematics were there. Yeah, all that stuff was there to help support that idea. But the idea itself was really more about liquidity. Like, you've avoided doing this back test for whatever reason, right? Hey, we avoided going up here, just like we avoided going down here. Well, did we eventually come up and push that top? Yeah, we went and checked it. Now we're pushing against that resistance, right? And I think in the same way, this is what I'm trying to say, like, you can make a very simple liquidity argument that this is indeed like perfect, in some ways, like perfect Wyckoff. Like, you're checking these areas, you're back testing them, and you're specifically bringing about distribution levels in places where you're going to go back. So it makes perfect sense to me to suggest that this doesn't go all the way down first, that you're going to have like a move back up, and then you're going to build out like a downside and check the bottom. And that generates on the macro, the big picture, a phase B bottom and a spring. So my idea here was and is largely like the same as it always has been, which is that you still have a possibility that you're going to come down low. I don't really care if someone says they don't think you can. I genuinely don't see that as a question mark in my head. It's like back here when folks were saying, well, I don't think it's ever going to go back down to 3. And I'm like, I'm sorry, but when we look at this, you have to just kind of think about what's going on. Why wouldn't they come back down right then? Why even bother making that drop? Well, this is now a floor. It's not going to come back below it again. Well, it already has. And again, was this a liquidity shelf? Yeah, of course. It's a huge buy-in right here at 3. And we're showing that right now. But now we're wrapping around 3. I mean, isn't it interesting that that's exactly where we come back down and we basically are generating like a wraparound? I mean, look at the distribution and the motions down through here, the walk down, I should say, right? So is there evidence that we come back? Oh, yeah. I mean, there's plenty of evidence. I'm not going to sit here and like throw it all in everybody's faces all the time. We've done this in like a dozen different ways within this setup to like talk about iteration and like what this means on the big picture, like iterating down, why that's the same thing as talking about like a macro wave finishing, why that matters, because that's the kind of TA that interests me. That's often what I do. And so I'm looking at that as like, yeah, it's very probable. We talked about the on balance hiking way up before any kind of major sell-off drop. We don't know how far down it's going to go. I've changed the targets a few times, and now I'm looking at like 3 zones. One's at like 34, one's at 26, and one's really low. It doesn't seem like it's ever going to get there. But like going back and looking at something like on balance volume, you're probably tempted to say like that it's not going to go down this low. But the truth is that if this is like a large format, like kind of we call a cat ear, right? Then this motion down, this middle motion down, that's your creek. It's very low, you know. Do I think it's necessarily going to get there and go as low as we had originally thought? Maybe not. But this is partially because I think that they changed the character of it right here. And we've talked about this in previous streams. I'm not going to go into high detail about that right now. But it seems like it's a higher mark, I guess is what I'm trying to say. It seems like the motion may not be to go all the way down. It might really be to come back and target this level around 23.5 million right here instead as a back test, as opposed to going to the original thesis target, which was real low, like down here in the 14s. It may be more like this 25. Well, they're never going to get there, right? They have to have some kind of catalyst to drop it. Maybe, but the catalyst might just be selling, like short selling and selling, like legitimate selling, right? Temporary positions are built up here that can then be sold off. And a lot of times that's going to show in the on balance volume with that movement and ultimately scare people. Like, you know, do you know for a fact that's going to happen, Booksy? No. Which is why I'm not sitting here saying this is definitely going to happen. The other possibility is very similar to what happened back here in May 2024, where you do get a sell down right after earnings, but it ultimately doesn't break below the trend, which I call the ICE, the rising support, right? It's just building up. And that case, it's up here at 3. Like that could end up being a liquidity shelf, you know? Does that mean we're going to come back down later? I've said it, and I'm going to keep saying it. I think if you get an LPS here, it does beg the question. It does. Because it doesn't really make sense to me to not come back to 245 at this point and like try again. Maybe 265 is a better number to talk about, but it just doesn't make sense. Like, why not try to do it? From a liquidity standpoint, you want to check high and then you want to check low. See which directions you're getting kind of the most liquidity. And it would make more sense to me to get a spring here. I would feel a lot more comfortable if it drops back below 245 and then takes off than if it just held at 3 and took off. Why? Why not just call this a double bottom on the big picture? It's not a double bottom. It didn't actually hit the double bottom. It's very close. But also, it's the same problem that we had over here, which is why not just go check it? Well, maybe you're going to come back later. Maybe you're leaving that door open. It also bothers me because, and we've talked about this frequently, is this setup is really similar to the range setup that occurred here, albeit without the lows, which is fine. But it's very similar to that setup where you have this distribution that happens above the top of the creek. And I am nervous that if we go up too far too fast on too little, that you're going to end up distributing. I don't want to do that. So obviously I want it to be as strong as it can be. I think the strongest possible outcome is hitting the spring and moving up above and then holding right here, let's say reaccumulating, because that's really the right word, up here above 570 up to about 7 and then break out again and head towards 20. I think that's the strongest setup that we have. I think pumping from $3 up to $20 or something like that, yeah, like it'll be awesome. Don't get me wrong. We'll all make money. But longer term, is that a great move? No. Like, you're really going to run into some of the same issues you did here, where you now have like this huge amount of space to travel down, and you're probably going to get a long-term distribution. Like, I don't know why you wouldn't. This is the MO of this operator. They have done nothing but that. Like, anytime you get these big, huge moves, it's great, but you're stuck in the long distribution. The same thing happened here. Right? So I'm looking at this like this is just a micro iteration of what we've seen previously. And I'm happier, I think much happier if this kind of pushes up, backs up, pushes up, backs up, as opposed to just going up to kind of a termination point where I don't necessarily think it's going to go further. Couldn't you be wrong? Couldn't it be more like your original thesis where this is going to go like way up here? Yeah, but I don't think so. I think I have to just take the chart shift and say that's where I genuinely think it's going to go, but long term, way off here in the future, not now. And look, hopefully nobody will complain if it goes way high, unless you just take profits too soon. But that's not my responsibility. That's your responsibility. You get to just choose when you hit that button or not. I'm really looking for a nice higher low here, kind of like an LPS, right? Within the range, right? And then build out again. So I don't want to see it necessarily even go higher than like $10 on the first move, which by the way is still a huge move. Some people are like, that's so low. And I'm like, yeah, but that's like 350%. Like that's a humongous move. Somebody calling that out is like when I was talking about going back up to 14 here, that's a huge move, you know? So I'm not particularly surprised we're dropping now. I'm not particularly surprised we lost the little uptrend that we had. I had said I thought it might just chop sideways. I still had folks in the Discord asking me, you know, what's going to happen? I'm like, nothing's changed. Like this is just setting up, you know, sideways, probably for earnings. And I can't imagine why you would make a move at this point before then. So you've got some levels of support and resistance right above you and below you. That's it. Unless it moves outside the box of 313 to 357, there's really nothing to talk about. Like it's probably going to go sideways. One of the things I always think about too is like, are these moves baked into bigger market moves? And the answer is, yeah, they might be. You know, I'm surprised that GME hasn't taken off yet. It looks like it might finally be starting. GME has some really good setup for a Monday, Tuesday move here. I really like this bottom, really like this bottom right here. This looks really good. I'm switching to GME now. This to me is like classic Booksy stuff right there. I mean, how can you get any more beautiful than that? Like that's the bottom, right? And that's a really nice setup as long as it either makes a higher low or doesn't come below the bottom, makes a double bottom. So we were talking about this setup last week in the Discord as I was on there. And I was like, I really just don't want it to come beneath like 23. As long as it comes back and it makes a higher low or it makes a double bottom, I think this is fine. Once this breaks above 24, I think it's going to be off to the races. I really do. Because I think this is roughly where it is. Now, I've adjusted it a little bit. I had another one that went up way earlier, like Thursday last week, and it was a peak here, but it didn't end up going, right? So it stopped short of moving forward, specifically breaking down right there. That was a shorter term markup, but the longer term one is still intact. It's still there. I don't see it as controversial. We've talked about it on a number of different ways and different occasions. I did a long stream that most people ducked out of pretty early, about a week or so ago, talking about GME as a iterative motion and what this means right here, right? And this is the iterative motion. This is the crazy thing, is that when you're looking at these motions and you're trying to determine which direction is going to go or whatever, I'm finding that this motion in and of itself, I think that's where it starts, is basically like your iterative motion. And it's pretty cool. Like we went through the whole thing and we tried our best. I think some of it got a little bit lengthy and sloppy at times, but we were doing our best to make sure it was right. And basically what I found was that this was like a high probability iterative motion that brings about only a couple different results. And one is an up thrust back down to 750. That long term leads to a bigger widening, a breakout. And I don't have it all on this chart, obviously. You can see it's pretty sparse. This is confusing because it looks like the setup is continuing into the RSI, but that's not the case. But yeah, this is one possibility here. The other possibility was definitely more bullish, which is like a change of character here in that this one pushes up. And it basically is formed out like likened to a widening of sorts, but you're using like a top trend. And we sort of went through this again a couple different ways. And ultimately, like what we concluded, if I recall, was that 50 seems very likely by next year, but that it ultimately might look very different in the midterm. Like I wouldn't be surprised if it hit 17 first and then pushes to like 50, right, going into next year. So that would not be a shock to me at all. I would just be like, okay. And there's a reason why, and it's the, liquidity word again, but we would talk about why that is, but that's really all there is to it. There's a few rising trends here that have been lost, and this is where we'd be back testing here like on a hook. There's some that aren't quite gone yet. They're not as dire. This one's kind of like hanging on. This one hasn't actually broken down, but these are kind of rising supports that we're slowly kind of chipping away at. The good news being that we haven't ultimately broken down, but could that still happen? Sure. That's a silly thing to think it couldn't. And there's a lot of evidence that 18 to 17 area right here was being targeted by bears, or by downward action, I should say, not necessarily just bears. So right now I'm thinking that one of the safer probably bets would be about 30 if you wanted to kind of shoot for a higher move. But really the best one is the current move to like 26. And that's short term. It's not long term. And I'm not going to go into the rest of that right this second. I'd have to find the right chart because this is not the one. This is something else. But yeah, I think this is an S-curve. I actually think this is a really good build out. It looks kind of bad because it's coming down, but I actually really like the way it kind of when it came down, it was perceivingly anyways, it was kind of narrowing in on that low. And then if it breaks out here, I'm really bullish on it. If it goes above just 24, there's a really good chance it's going to kind of push up and meet the rest of this. This is a really typical high, low, high setup. So what I mean by that is that you have, as a wave, right, you have like a buy-in right here. With a sell-off leading to another buy-in. So it is an S-curve, but like at the end of this would be a, most typically would be like another topping motion like this, and then you have to make a decision from there. So it's a pretty classic M. Like push, pull back, push. So that's what I'm looking at, and I'm thinking that this almost is like, it's hard to believe it because it's low right now, but this is almost like a perfect setup. And to me, this guy right here, I have it on a dotted line. I'm going to bold it. This is probably going to be the best short-term target that you can come up with right there. So how big is that move? That's a big move. That's a 12% upside move. What about your timing? What if your timing is wrong, Booksy? What if? I don't know. What is there to say about that? The way I would time this out, and this is not really a better way to do it, is just to look at the setup and just say, well, where does it end? All right, well, there it is. I mean, now, right? Oh, it's breaking out right now. Well, there you go. I don't know what to tell you. That's the best way I would do it. I would just block out the top part, bottom, up, down, and then I would look at this. But, somebody else could come along and try to measure it differently from like breakdown points to breakout points. So I don't particularly care, how you want to do it. I did it where the middle is where it starts jumping the creek here on July 9th. And that must have been a good reason for that. I can't remember why I did it the way I did it here. But that's the way I did it. So right now, I think that this is the supposed trend target. Friday might be the day that it's up there. I wouldn't hold my breath for that. So if you're somebody that likes to trade options, it'd probably be better to just, hedge your bets a bit and not be looking at a Friday pop. Fridays are tough days to trade because a lot of times, even if it's going to go there on a Monday, a lot of times they'll kind of crush it or keep it low on a Friday. You really have to be careful with that. So, as you're aware, I'm sure. So anyways, do I think this is pretty likely? Yeah. What if it doesn't get up above 25.50? Well, this isn't just an S-curve. Like, there's a long-term creek coming down that we lost. And I measured it out according to the iterations, like where I think that top should be. So I'm not measuring from the peak. I'm measuring from the second top. And there's reasons for that, that June top. But this is essentially where that resistance has been drawn. And we broke out from that resistance in May, and then we slid back beneath it. We almost did a perfect 50-50 across it here. That would be a key place to have resistance in the pocket of bears. So like if you don't want it to break out or go higher and fill this gap completely, you could stop it here. There's also that rising trend that's currently been lost. And that's also in the same vicinity. So there are evidences that, hey, you could get hung up at 25.23. I did note that from the iteration standpoint, that the backup zone, and I think we did it over here, that this backup does come back above and utilize that middle jump layer. So if you were to go back and look at this in a comparable way, right, you would say that the place in which this jumped over the creek the first time, ends up triangulating and becoming the support. It's also kind of like a middle of an S-curve, although the top is super extended. So we were looking back at this and we did the comparison, and it seemed to fit the bill that that's probably this area right here from 25 to 50 to 26. It's the same region. So the question isn't, to me, is like not, does it break out right this second? I think that is the question. Is like, does it break out right this second? I think that's a difficult one to answer because it could be that, again, this is that topping motion. There's really no way to know unless it finds that support and then pushes up again. So I wouldn't be so quick to say it's going to definitely break here. If you find support above 25.74, especially if it goes high and then finds support here, yeah, then you're in good shape. You should be able to at least make some kind of an educated guess and say, yeah, I think it's probably going to go again. If it finds support here, that's possible. But my expectation is not that. My expectation is that this is an S-curve that's really leading into another top, and that top ultimately isn't going to, probably not going to break out right this second. So what I'm looking for, I'm going to do it this way, is like, yeah, there's probably going to be a finishing motion here, but then, and this is a bit of an assumption, I think it's going to kind of top off here. And that's just me. That's an opinion, okay? It doesn't have to be exactly what happens. But I think this is going to top off. And then the question then is not how far does it go. It's more like how low does it go, like not how high does it go. So from that point forward, there's a lot of speculation on my part because what I would do is look at past examples and say, well, in order for this to have continuation, we'll get rid of the GAM box because I know it's really crazy. In order for this to have like continuation, there's typically only a couple different places that I would look. Hey, stop. there's really only a couple places I would look. One would be coming back down to this gap that was left. There's a gap down here around, I guess it's like 22.10. That would make sense to me. On the big picture, it kind of lines up with everything else pretty well with that creek in the middle. This is the most common place that you're going to back up to. Again, because where is the resistance? It's right here. So building a support off this is great. You can kind of see yourself bouncing here and going off. But then if it comes back down, yeah, that's low, but we also have a gap here and we have supports. Now, is it possible that that's a weakness of some sort, like it's going to drop beneath that and then you'd be in big trouble? I mean, it's possible. I'm not going to say it's not possible. It's possible. The other place is that, again, and that would be like a continuation down. I don't find that to be particularly controversial. I just think it's what it is. So if this ends up dropping and then continuing, you might see like continuation down. Doesn't have to. So this seems highly probable coming back to 22, especially if we don't hit it now. This looks strong, but I think the build out just makes another high here, pushes up towards the top. The other possibility is that, again, it kind of keeps it from going all the way up. And this is similar to what we would experience on AMC, where you're avoiding going high. So if that happens, and let's say it only goes up to 25, instead of going up and actually checking the top here at 25.60, for whatever reason, let's say it comes up and it checks 25. There's a gap zone right there. It's kind of interesting right here. I didn't see that before. And there's a gap on top of that gap, so still hasn't really been filled. But let's say for some reason it only comes up to like 25.30. I think there's a better chance if it stays low, actually, that this ends up being kind of bullish on the dip. I think it'd be a little bit challenging if it goes really high, especially if it comes all the way up to this top target, which is kind of what it looks like, that this stays high. It sounds weird, but like pushing resistance is one thing, but pushing up into the bottom of another range and then dropping back through it and back through a creek is typically more bearish. That's what happens here. That's what happened back here is it went up higher than the top and then it came back down through the creek. It's typically more bearish, okay? And not usually a good thing. So if it only goes up just to the top here and then it reverses, I think that could be a sign of strength, believe it or not. It sounds kind of backwards, but it would be like a resistance that's like kind of holding off on breaking out. And it's better to go down first and check the downside first and finish the downside before breaking out than it is to go too high and avoid downside. Does that make sense? That's like typical earmarks for distribution is like you're going up, but you've avoided for whatever reason going low. That usually ends up not playing out very well. So these zones right here, I think are really pivotal to the movement in the future. And I can dance around this all day and tell you like, here's what I think may or may not happen. But at least short term, I'm looking for that move up and then we'll see how high it goes. I think we've got a decent chance if it holds a reaction here that it's going to push pretty high. Timing is timing. I can't be sure it's going to be like a rocket here, but I could tell you that the S-curve looks pretty good, and I've already shown you why with the Gann box. This looks pretty solid to me. So I think this is like a slingshot model, which typically is a 50-50. So if you take that and you go to the drop zone here, yeah, it's looking low. It looks like it may only hit like 25.43. If it came a little lower, it might go a little farther. And then the top one, yeah, that's the top target up there at 26.42. So it looks like we've got two targets that are probable. One is from the drop ledge, that's 25.30. And then the other is to the top here, which is closer to the top of the S-curve, which is like 26.40. Both of those I think are legit targets, but they're pretty good. Okay. So while AMC is down and may look kind of bearish, it would not surprise me to see it kind of pop up. And what happened previously is kind of interesting. If you go back and you look at, so I'm not saying it has to be the same, but if you go back and you look at this setup, notice that when this comes down low, it does come pretty low. So this is like the topping action. This is the breakdown, right? Broke down. Notice that when it comes back up, there's two places. One is like this hook. So we might say that this hasn't happened yet. We don't know. This push up. But anyways, regardless, there's a generated trend, and then there's a push on that resistance before the push down. So again, you're checking top, which is checking high, and then you're checking low. And this is essentially the same thing that we were talking about on the big picture, checking top and then potentially checking down low. But what would that look like here locally? You can use your imagination. I think now you guys are like, what? Use my imagination. Checking top, checking bottom. Well, we don't really have any strong top right now. Like this is the only one. So if this were to push up again, maybe GME is having like this nice run up right here over the next couple days or something like that. Don't know exactly what that looks like just yet, but let's say it does have a decent run up here, and it sets up pretty high going into midweek or something. Well, if AMC has this reaction, it's possible this goes pretty far. I mean, it doesn't have to stop at this particular trend support. In fact, it'd be kind of odd if it did. Actually, I'm going to take this back because I think I drew it wrong. This is really steep. Yeah. I think it'd be odd if it stopped there. I think what's more likely is you're going to get like a wraparound, and this is going to generate like a new trend. So like a midweek move here in a comparable way. Probably not going to come all the way back over the top, but more than likely generates like a new trend of some kind. Something like that. And then I wouldn't be surprised to see this kind of, I don't know, maybe on earnings, it's a little different in terms of the setup. Earnings in 2024 came after that push. So at this point, it's almost like, well, why not just keep going down until earnings and then just pop there if earnings is around the corner? I don't know. It's a good question. And hey, correct me if I'm wrong, but would there be a confirmation on earnings that's not on this chart? Because right now it still says Wednesday the 6th, but I saw on I think it was Fidelity or something, it said the 31st. So I thought that was really strange. It was very different. These could be estimated earnings dates, not actual earnings date. But does anyone know if there's an actual earnings date posted? Let me know if there is. Yeah, so anywho, so it wouldn't even surprise me August 1st. Right. Do you have a press release for that? Or is that like from whatever? But no release date yet. So I'm hearing different things. So I heard the 31st, I heard the 1st, I heard the 6th. So I really don't know. All right. What I asked for is a specific press release, because if it's just on your Webull or TradingView or whatever, that's not confirmed necessarily, especially since they all still apparently are approximate. I don't know why they wouldn't release it. It's a week out. Yeah. This would make the most sense to me. React back up, resist right around here. We might have a big pop then coming in tomorrow and the next day on 8-1. Yeah, where is that from though? Zach's investment. This, all right, so this tracks. Earnings per share. This has 0.06. Whatever. This tracks. I think we'll see a build out up, and then maybe if that's earnings, who knows? We'll get that push up here. Some kind of like a shake up and then back down. So kind of like a nothing. Something like that would make sense to me. Going into Friday and just like kill it. A lot of this is going to depend also on tariff news, I suppose. It's coming up. They hit a deal with the European Union, but it's higher than it was. It used to be like 1 or 2%. Now it's like 15%. And then but it's lower than what they had threatened, which was like 25% or something. All right. Well, this is all kind of the same. So it's this pocket. Anyways, it wouldn't surprise me to see this. Check that top. There's a gap down here also at 302. I wonder. It's starting to look like a head and shoulder as well. It's kind of interesting. If it's a head and shoulder, then the neckline would be here, which is real low. Well, that tracks though. I mean, that tracks with this, doesn't it? And it actually tracks pretty well with the current setup. I've got all these lines going different directions, but really, I don't need them all, so I don't know why I do all this. Let's just make it one. So this would follow that as a head and shoulder potential. Actually, it looks pretty nice too. I like this setup. Yeah, so far so good though. $218. That's interesting. What are you doing, Booksy? Why are you doing that? Why am I doing this? It's like superstition almost. I actually think there's a reason mathematically why this might be right as a potential for a low. Weirdly enough. So the only way I can explain this is going to show you something real quick. So like back here, when this was going into its curve, there was a trying to remember how I did it though, because like I want to say it was the middle was here in like April to May. I think it was April 20th. I think that was the middle, which interestingly is really similar to this guy being like a low pivot here. Because it was the moment it generates, but this was different. This generates like the second motion. So this is ear 1, ear 2. Could be ear 1, ear 2. All right, anyways. So I guess I can't really remember exactly how I did it back then. But what I found out was that there was a, this is a long time ago. There was a real low marker, and it ends up matching kind of the bottom. But what was interesting was that do something different. So what ends up happening is that this generates a marker that has long-term implications for this trend. But the reason why this mattered to me at the time was because when we did it, I guess, again, not knowing, like I gotta clear my head real quick. I just don't remember. All right, so there was something I found here. I'm trying to remember exactly what I did, but it was a long time ago. There was something I found here that was basically like confirmation that long term, this was the middle. And I think what it was that there was a collection of markings. And I actually think it was lower than that because I remember it being way down here somewhere. And weirdly enough, it does go there. Like that was what I was trying to get at. So when we did this, I want to say it was because of this widening that was happening right here. But I cannot recall at this moment. So anywho, this is kind of pointless because I can't remember. But there was a series on this wave. There was a series of trajectories from the middle facing up and out. So like the narrowing in targets this direction and then the outward targets this direction, those all formed in a symmetrical way so that you had the same targets going in as you did going out. So it was like if you had used those same targets, you would have been able to derive, especially this one, the creek jump target. If you had the right middle, you would have been able to approximate where it was going to go later. And it does. You can see it, which was kind of amazing. So I remember at the time thinking that this, for whatever reason, was the middle, and that was part of the reason why we got that target. So it would stand to follow that you could do something similar, but what I think I ended up doing on here was I used like multiple variables. So I used like different ones to try to find those trajectories. Anyways, it stands to reason then, I suppose, if you're doing something in a similar way, in a build out manner, that if you had the knowledge of like kind of where that middle was and you knew where the inward trajectories were going, the outward trajectories would be quite similar. I think we've done this enough, probably done it before. Right now, the way we're doing this is really based on just essentially just overhead resistance and then some trajectories here. That's what these dotted lines are, and that's kind of it. There's nothing really else going on here. It looks like a lot, but there's not that much going on here. Almost all of this is either just support or just overhead resistance. But what I'm curious about is if maybe this model that I've got, if it represents kind of the same thing, we may have the ability to see like a middle pivot. I can test it real quick without wasting a lot of time. So I'm just going to test it real quick. Because this one I know we have this one. So I know we can do this real fast and just see if it works. So then the middle is here. So let me just try it. So let's go to the bottom. Let's use the gap, right where the gap was. Let's use that. And then, yeah, if you're asking the question, did that generate a a trajectory marker there? The answer would be, yeah, it does. I mean, that's where this tops off too, right there. It's pretty similar to what we just saw in the other one, the other example. This consolidates, and then eventually that's where it breaks out. That'd be nice to know, wouldn't it, Booksy? What if it's that simple? It isn't that simple, though, because ours is probably at an angle, which I mentioned before. So it's not as easy as that now. We can still do this, but it wouldn't be necessarily correct at all, since it's at an angle. And you have to have the end in mind. So you have to already know, like, this is definitely a 2-year cycle and yada, 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 because we don't have the end. But then I'm curious if you did like a more extreme one, what that yields. Like, let's say we use that point. It's not really that different. It's not really much to talk about there. So let's do something else. Let's do like this trend here, where it found support and then dropped. So what am I actually doing? What are you actually trying to do, Booksy? I don't think what we're doing is actually that big of a deal, like mathematically, because I think what we're doing is we're really just finding tangents. A tangent is a place where the line only touches like once. So like if this is the curve, then this would be like a tangent coming off the curve. Right? So a tangent means that it just touches the curve once, right? Now there's infinite numbers of these. So how could you possibly know? Well, again, we're trying to go from the peak. So we're really looking at like that as a tangent, essentially. So there's like an indefinite kind of squeeze into that corner. We're probably not getting it perfect, but that's the idea there, right? So could you continue to do this? Yeah, because you can change this curve to match whatever you need to match. So like you could do this as many times as you want, and it would be infinite. I mean, you could just keep doing it. But these would generally be how your trajectories are being made anyways, if you think about it. Because if the direction of the market is, I'm going to follow this curve, then it just depends on like how steep the curve is at any given point, right? And you probably have like multiples of these. You know, we could do it like, again, like infinite amount of times. So we're getting kind of the icing on the cake, where the whole thing has, again, like almost an infinite amount of possibility. And all of these work. You can go back and use them, but like you could derive tangents from those. So how do you think that plays into what we're doing now? Well, that's what I was just saying. Like if that, for example, like if this guy, if this is important, and I think it could be, and it is in this case, you can see that one marks off pretty clearly where it's going to go. I mean, that's really clean. That goes right to the end. You might be able to use something like that in combination with something like this, which is sort of what I was doing a minute ago. But this doesn't go to the same place. I don't know. Well, that was probably a bust, but it was an idea. It happens. Not everything is going to bear fruit, I guess. Well, that was a waste of time. Kind of. Well, I mean, the good news is that this is a pretty steep there's a few trajectories here that are pretty darn steep. I mean, you've got a lot going on. If this is the motion here, that's not the steepest of trajectories, right? That doesn't make you feel particularly good. It's like, oh, we're only going to go up to there. But remember, like, we're not thinking this necessarily goes way beyond the moon here. So this actually makes a lot of sense. This is way out here, though, in June, which would not be good. That would take forever. But then again, it's at an angle. What are you trying to say, man? Just say it already. I wonder if we can triangulate. So my curiosity was, I was wondering if this could help. The whole point of this was I was wondering if this could help identify where the low was going to be. And I don't know for sure, but it might. It may help you generate kind of an idea of where that low is going to be in the future. It's a bit out there. Unless my middle is just off. 34.02. No, it's right there. It looks like they're just using the bottom, like the floor, like bouncing trajectories. I'm also not convinced this is going to work the same way because it's different in the setup. But that would be move 1, move 2. So it actually follows through pretty well because this would be the setup like as it's spaced out right there. I don't know if you can see that now. So that would be like the spacing of it. What doesn't work is that this definitely makes it look like it would take till May. But I don't think that's quite right. Because again, I think this is an angle. But I don't recall how I did the angle, so I'd have to find the other chart. I want to say it was this one here. But that was the angle. It's definitely one of them. That's where the resistance is. Guys, if it breaks there, it's going to go. That's definitely the right one. But what? Well, this doesn't help you get look at that. Right back to ape creation. Figures. Where's this going like long term? This is a strange one. Ape creation right there. It's probably just the shift value. doesn't help really understand where this breaks out, why it would be over there. There's one more that's of interest, which is the shifted value for this, which is a little bit complicated. But I think it's this one. So the shift value on these is yeah, I think I got it right, because I think that's it right there. It's like right there. So it's right here. So see how like that matches with what we've already got on the screen? It's not like wildly different because we're just using the tops there. But then if you take it off, that's still like the generated channel. It could be slightly off. You can see those bottoms are all below. So it's like right here. That's a big resistance spot then. I think that's where the curve ultimately like finishes. Roughly. So it's right there around February, which makes sense. That would make a lot more sense. So February 2026 here. I hope that's not like a termination point of like, I don't know. Never really would have expected there to be like a March squeeze. We had the idea of February being a top or whatever. This is hard because I can't really know where the curve is here. Like I think I'm right. I'm not sure. This is almost like a different way to do the chart. Even if I got this, I don't know if I could do a, like how would you, I'd have to do some kind of trigonometry because I don't know how you'd find the angle, the correct angle. I guess you could add the angles to be easier, but yeah, this kind of implies that you wouldn't leave till right here, which I don't know if I agree with that. I know I just did it myself because I'm like messing with it, but I'm using these dumb arrows instead of using like just lines. I think a lot of people have already given up on AMC. And if they're waiting for me, I don't think it's going to happen. It'll never run. Yeah, I mean, you can make kind of a scary argument here about this being like a sell down that's similar to this. I mean, the way it sets up inside the channel. That's why I really want to get the spring and then go. I don't want to pump up. I don't want it to be like this one where you've got this kind of downward motion like this. I really don't want that. It's not impossible. I mean, you just look at it. You don't want to see something like that. That certainly looks right, doesn't it? It's kind of scary. You really don't want that. You don't want to see that kind of like rising bottom that just has this big push up. It just implies that you're going to like pump and then dump back down. So I don't want to see it do something like this where it just like rockets up, hits like $7 or something, and then dies. It'd have to hit like this one, 703. It'd have to hit this region. Yeah. You don't want to see that. You don't want to see like $7 and then like dump back through and do this. It's just going to go off the face of the earth. Talk about ugly. I don't know why I would do that, but this is what I was saying, like I guess we could call it a fear if you want, but I don't want it to see it come above. And this is the same area. If you look closely and come back, it's the same region that it's always kind of sold off. So you do not want to see a upthrust. What I was saying is like, really don't want it to go too high, too far. I don't know why it would go that far, but maybe really far up here and then sell down. It's just a difference between going up first versus going down first. This would be a nightmare. I mean, to be fair, aside from this area looking kind of bad, there's not really any other reason why you would do that. The setups are always going to look kind of similar. But yeah, that would be ugly. I wouldn't want to see it hit $7 and then slide back down. So here's hoping that it doesn't go up after earnings, like just rockets straight up. Yeah, that's where it would be. It would go down to like $1.50. Hey, good to see you. It may seem unrealistic, but that's not. It's really not. It's pretty standard. This is what you would expect if it dropped. You know, did you come back down through the low, and you just come back to the creek? So it's pretty much in the right spot for it. Just pump it to 7 and then dump it, and then this is a widening. So you know, you lose it, you're at least going to come down to the floor. I wonder then if you could make the argument that we haven't even finished this part yet. That this is like the earnings move. If you did it this way. I don't know. It's not really a widening here, but we're going to do something like that. But this is way beyond. I don't know. I really just don't want that to happen. I guess that's all there is to it. Like, it would be way better for us to go down first. Like, the chop here and then go low, I think would be extremely good. By comparison. If we just go straight up, it's really hard for me to not see how that's the same core concept is the same. Well, we better hope that it doesn't do that. There's going to be a lot of bag holders. I wish I could tell you like there'd be another reason. I can't really see another reason beyond just that, like what we just said. Like, what would be the other reason? Why would we go down there? I don't know. I can't really see one. Because otherwise, the setup still looks more comparable to here. I'm not trying to purposely make it look bearish, but it has similarities. There's some of the roots are the same. But I don't find that to be a particularly compelling argument. Maybe the idea of this coming down to retest this particular creek again and just come really low to like $1. That's how you get there. I think if it goes to $1 though, you'd probably need a lot more ammunition. That'd be really low. Yeah, that's the idea of it going too high too fast. Like $12. $10. I don't want it to do that. This is really no different than what I've already talked about in some ways, because while I think this is kind of out there in terms of like everything, I mean, it's an out there kind of idea. I wouldn't ever say something couldn't happen in the market. I think that's really silly. And the idea of it being generating like a motion or a path to $1 seems really ludicrous to most. Like, it's never going to go to $1, you know. That's always what the people say. It's never going to go to $1. But I don't find that to be particularly compelling. Like, this to me is fairly compelling evidence right there. Like, the next higher motion on that jump certainly looks like it's a possibility. So what are we actually trying to say here, you know? Well, I think what we're saying is that if for whatever reason, and earnings is coming up, if for whatever reason earnings generates a pump and it goes up to like $10, I think that's a bad thing. That's all there is to it. I can't see how that would be good. Yeah, if for whatever reason there's a pump to like 10, and I'm even like wondering about this idea of it maybe having like an LPS and then pumping to 10. I think it could be really dangerous. Even if it did drop to like 292 and then just took off. Maybe it's because the threat of 1 is just there, but I would be way more comfortable seeing that dip again to below 240s, maybe into that region. I think that would be far better, and then just not go as high. I can't see a better outcome than that. Because this pump, we would always be like at risk of coming all the way back to this creek. There's like no way around it, you know? But doing the low dive first, you're more likely going to take off and stay upward. So the timing here has all been fairly similar. We've never really seen anything beyond September in terms of like the first big move. Yeah, this is pretty similar. This is the 4-hour moving average. Is that consolidation? Now I'm like looking at this like, oh, you know. And this one actually has the setup before it drops, so maybe that's a good sign. There's nothing, no news catalyst that's going to dump us off the face of the earth like that. So hopefully, so that's good. So it's more of like a micro version of the same thing, which is a good thing. It's kind of weirdly similar. It's also weirdly similar to the big picture. I don't know if you can see that. You see how there's a pattern here of like similarity in the pump. See how this like pumps up and then it holds and distributes along that 4 hour, and then we come below it. And similar to what happens here, it's a consolidation along it, and then it comes on top. But then on the smaller picture, I'm looking at the two comparatively. Pumps up above, drops below, and it looks like it's building up, but it's like refusing to go down again. This is what bothers me about what's going on right now. I want it to go down first. Yeah, just look back here and you can see what I mean. See how like this comes up and then it doesn't quite fill the gap. And then it sort of consolidates back up like it's going to run again. It's this like fake out motion where it looks like it's going to hold that support. It's even on top of this trend. And then take a look at where we are now. You can see that drop through. Although I don't know about the idea of it not filling gas. There's still a gap down here at 303. So you could imagine a few different situations. But one in which it just kind of keeps chopping up. Like that into earnings. You don't really want that to see that just kind of take off. Try to take off to the upside. I don't know. There's still a lot of unanswered questions. Because if this doesn't hold up high and it comes down low first, then it's just really like a flag. And you can call it whatever you want to call it at that point. And then we have the possibility of like a double flush, like down up again. So from the flag motion, which is more typically a cat ear anyways. You know, that's why I was saying like this wouldn't be the end of the world. This actually looks fine to me. Because this would be a setup where you'd have the flag breakdown into a macro spring. So that does work a lot better. And then you drop out of that and you head on up. And you can still do your like 50-50 stuff. Yeah. Hit like your $4 mark high. But you've already like dropped through, so that would be good. That's different than like if you stay elevated and drop. It's also different than if you drop and then rocket way too far, which I think causes some problems with this setup. So doing the drop first, it's the same thing. I'm kind of coming to the same conclusion, which is fine. It's the same thing we already had on the other chart. But again, that's okay. I don't see that as a problem. You might see it as a problem. I don't see it as a problem. Yeah, I had the wrong marker on here. Right, so that's your actual curve right there. And I'm having a little bit of trouble finding like the midpoint. So what's this angle? 21 degrees plus 180. So it'd be like 160. Is that wrong? That's wrong. That's not going to work because this thing moves. I guess you just flip it since it's always relative to itself. So it'd just be 20. That still seems wrong. It seems really low. See, that's not it either. I can just do it like this, see where it's at relative to that, and then take that angle and use that angle instead. 180, 120. All right, so that would be the angle of, it's like a bow and arrow. Like there. That kind of works. That actually looks better anyways. That works here. All right, well, that's a tough one because that angle's wonky. It looks like it's going off the top here and then through that breakdown on June. This matches probably some other trajectory angles as well, but this is really the one I want anyways here, but later. That's the $7 mark. So that's the one you want to get to after a spring. And then a 2-year marker. So this is August 2022 or August 23rd. Actually, really soon. It's Friday. So it has to be a Monday, the 25th. So that's wrong. Well, we are assuming a 2-year mark. I can't do anything else. But it's hard to say because there's a second drop in later in September. And that's the one I've always kind of thought maybe that's the one that's more accurate. I've always flip-flop. But this would not necessarily be the place that it breaks out this time. It'd really be more of like potentially where it takes off August 22nd into the 25th. That works. And then you go up to here, which is the previous resistance. It's above that top. It's in the right spot. It's right there. I don't know if you can tell, but that's coming down where it normally distributes. And it can't distribute. It has to come above it and hold above it. So that makes sense. That's the right spot. And it would come back up here. It's got the angle trajectory on it right there. So it hits like 750. That's the right spot here as well. That's a really good triangulation pattern. This is the kind of place where, like, when my charts start looking like this, I think that there's a sense in which it looks like nonsense, but what I'm really doing in my brain is it's like a web of trajectories and triangulations within an arc, like within a wave. This isn't exactly sensible in that it doesn't have, I'm not just using liquidity levels and stuff like that, although they are here. And then this matches pretty well with what we see here as a triangulation. There's just a lot good, there's a lot of good spots here. So I'm finding this to be a very compelling setup. And weirdly, if you look at year over year, this is September 11th, or excuse me, September 7th into the 11th. So that's one of the strange things about this is that if you look at where that is, that's the 8th right here. And then that's the 11th. So if you look at where the 8th is, it was at $8.13 on September 8th. So weirdly, if you look at that and then you check out where this is, it's like right in that same pocket at the same time. This is September 5th and the 8th. So the 2-year cycle, bizarrely enough, comes back to its own roots here. Goes back to the same spot at the same exact time. See, we don't like that because then we have to kick ourselves because we think it was too easy. So you're just saying they were just going to come back to the same spot that they started at 2 years later? Maybe. It might be that simple. But I do think this would be a lot healthier if it has the drop. So I'm just going to say that. I don't really want to go much further on this particular line of thinking because I think if it does go high, it goes too high, too fast out of earnings, for example, and doesn't hit the lows, I think we're in a bit of a pickle, as it puts us in a bad spot where you've kind of avoided going down, which is more similar to what we see here, where there's like an avoidance of downside early. Instead, you keep pushing up, pushing up, pushing up, because you're basically just bringing in more sellers, and we don't want that. And I don't see this as a bad thing, except for that this did happen before and it had the same result. You pushed up and you just came back down. So there's a question mark there, you know, and I just kind of leave that open for now. I don't really want to, again, I don't want to assume it's going to do that, but there is evidence it would be pointing to $1 at that point, which is really low. And I think it's a lot stronger if it goes ahead and makes the drop first, especially with on balance being extremely elevated right now. I think you're more likely going to see that if that drop happens, that the shakeout is actually just kind of confirming what we already knew. So what we'd like to see on earnings, weirdly enough, is kind of a pump and dump. And go ahead and drop this level, believe it or not. Either way, you're going to get a good move shortly after earnings. It looks like by August 22nd. I'm going to stick to my guns about that. I think it's very likely that Friday into that Monday. We've timed this out a few different ways anyways, and it's always pretty much the same. But that seems very likely that by that point you're going to be pumping. I just think that if you go too far too fast, if you just avoid going low, you're kind of inviting disaster. And I'm not really sure how to make heads or tails of that other than just to say I don't think that would be good. If it goes up to only $8 or $8.13 or something like that, $8, and then it comes backwards, you should land at 4. If it does the spring, you should land at 4, and then from that point forward, you're really just consolidating. And we were just talking about there could be a longer build out, maybe going into January, February. I don't know how long it's going to be, but something like that. That's the same thing we already mentioned. But that setup is actually pretty strong. So that's still the ideal one. So I didn't find anything new here. That's okay. It's actually good to have like some consistency. I would prefer if that happened, because then we're walking across, and there's some similarities to this. So, I mean, it would be kind of scary on one hand, because you'd be like, oh, we've already done this, Booksy. We've come across the top and chopped along the top before, and now we're doing it in the same spot right here. Yeah, but again, if you've already gotten the spring, there's really no reason to be scared of that move.
you still have to wait and see what happens, but because you still have to see this build out like an accumulation would. But there's a much stronger chance that this is going to build out into something positive if it does this than if it goes high first and then slides back through. I think you're in a pretty nasty situation long term if that happens. And I didn't draw the secondary motions here. It may not be that fast, but it would be potentially devastating. I'd even be worried if it popped here and went up to $6 at earnings. If it just goes like straight up and there's no downside, I genuinely would be concerned. Some people are going to say that's stupid. You know, just look at the liquidity levels. If it doesn't drop below 4, you're fine. And I would agree, you know, yeah, there's pieces of me that are like, yeah, that would potentially still work. But I would just see this as like a continuation of the widening, in which case we still have the possibility we break down and head back towards 247 because now you're just widening further. You've hit 3 tops, you know, you've hit 3 bottoms, whatever. You're still in a bad situation, in my opinion. I don't feel like that's very strong. I would have to wait that one out and see what happens. But here's what I'm thinking. I'm thinking by September, mid-September, we're going to hit $8. I think that's pretty likely. Or $7.50. I think there's a really good chance that's going to happen. So if you're bullish on AMC for at least to there, you should be okay. I think everything else is a bit more speculative. But what we could also do, we can kind of ignore some of this other noise and we could really just focus on some of these angles and see if they make sense. This one to me makes a lot of sense going up to 20 as like a breakout. I'm guessing that this goes back to like the top. Yeah, it triangulates pretty well back to 20. So again, that's going into like December time period or whatever. So that works. But I would suggest we could also just kind of look at this like we did the previous one and see what we can see. Again, kind of sift through the noise here a little bit. How would we do that? Well, I suppose what we want to do is just focus on the top and the bottom and see if it helps. So that's just this one. That's this one. This one. This one. Why did it do that? Mm-hmm. I'm going to turn these ones off for now. I kind of like them being on, but there's other reasons for that, but we don't need them on all the time. And this is a curiosity of mine because I'm not really sure why you would use. I guess what I'm thinking is that this makes the most sense because where it took off from, and it goes back to that. It checked below. This was what that test was. This is why it makes me nervous about the idea of coming down again to like $1. It may seem ludicrous, but if you look back here at this as a liquidity check against this back test against this creek, then it suddenly like adds up that if that were dipping below it and it failed to find sellers, then you're not going to come down likely again. We found a lot of people that want to, or find buyers rather, find a lot of people that want to buy below that creek. It's really just a strength test. I don't know. That's the best way to put it. It's a strength test. So you can see that reaction there. I guess I'm a little nervous that could be like, again, followed through on later. But then I'm really looking at where it took off from. It definitely takes off from that spot off the creek right here. So it back tested the creek and then took off. VRVP. I mean, most of it's there. It's where that arc is going. So, I mean, that's the 25th right there. It's right where the arc goes. It's right at 477. So, I think we've got it right. That's probably where it's being like thrown into. And then, I don't know, beyond that, it's kind of hard to see. I could try to like add more noise to the VRVP, but there's a little bit of a support at 815, so that's the same area. That's what I just said, 813. But that makes sense because there was a consolidation there a long time ago. There's also a consolidation at like right below 7 at like 690. So these make sense as that's where those liquidity shelves are. Those are the areas we're talking about when we were talking about the groupings and where that might go. So I don't find that to be it's not hurtful. It's just not. I mean, it is what it is. That's kind of where I would expect it to be. So I think we're doing a loop back to this data, and then there's a lot you could take from that, I guess, in terms of like the rest of this distance. Maybe this is the build out above it over time. That's 1057. But that's a little bit more complicated. We have to talk about why that would be the case. This could also be an indication of the build out below it, and this goes down to 2 from here to here. So just looking at the arc, the difference between where the middle is. Because I'm thinking that this is probably representative of like a middle point. I think it's also representative of that shift value. But it certainly looks like it represents the main trend. So you can see like that as a middle point in a giant trend. This is a low test of liquidity to test the bottom of the trend. And that doesn't mean you're going to go below it again. Like just like we went above here, it doesn't mean anything. But my bigger concern is like, hey man, if that's the point of this as a check, a liquidity check, are we at risk then if this is some kind of a series of parallels? And again, I think this is, again, you look at the same way you did it here. This was also a dip below. Yeah, this was also a dip below, and it didn't come back down through it. So that fear of like, we're going to come to $1, that's probably the same thing that was feared over here, right? And it didn't happen. So that's why I'm saying, like, it's better for us to go ahead and get that that low and take off. I think it would work. I think it would work very well. It's like, go ahead and get down there and take off and avoid it. So I'm wondering, though, if this ends up being, because it's like a drop-in level, this is the 50-50 here. Funny enough, this is how I did the S-curve thing, too. I don't know if you guys remember when I did the layup, I took this measure and measured it out over here, which was interesting, because we're doing the same thing right now. But I just find it to be interesting, like, that's effectively like the shorted move to some degree. It might be a little bit off. Could probably pick a more conservative value of that, like here. A conservative like move. And then take that same thing and apply it here, and you get 1135. So it's a shifting of the range. That's exactly where everything should be, right? So let's say, for example, like this was the spring motion. I don't really know how you'd get there. But you could just, again, take this for what it is, come down to like 210 and then take off here. And that would probably be fine too. I don't think that would kill us as long as it goes down first. And this looks like it goes back to, for good reason, it probably goes back to the same levels. So this would be the top here, and then this would be attached to the bottom there, right here. Yeah, this works pretty well. I like this one. 212, and then that's on roughly August 20 something, and then takes off. You do a quick, probably would do it right here, right around 4, and then take off to the upside. Now I had it only going to like 8, but if it did go all the way up, I guess it could go all the way back to the top. And then it would come back down to 4 or 475. And then you just reconsolidate or whatever you're going to do. Going out into December, same deal. And then the $20 comes with some caveats. But I think that's I've already talked about this. I think that's just us coming back up and filling the gap. This gap right here. That's just the shifted gap value. So that would work. So around February. Actually, that looks pretty good, because then if you check that out, that's where you'd probably top off. I mean, it goes beyond it in February, but that's not unusual. In fact, that actually looks pretty much exactly the same. Like you'd have a similar motion. All of this is supported with other ideas too. We've done this so many different ways, but a lot of this is supported with the same concepts. We talked about these macro, or these macro. We talked about these motions to define like where that top might be. And this guy, in 2020, this defined where it was. I mean, it was really straightforward. Like they had already built it out, and this is what defined where the top is later, here. So everything is in the right spot. Like that's a really good clean spot for that to be. All of this works very neatly, I would suggest. But it's just like when we talk about long term, this took a year. I mean, this is still a little ways out. 6 months, but it's happening. It's going to be unprovable. It's just not going to be provable until it happens. So, I mean, like, and then you're going to be like, oh, it happened. So all this is going to look like speculation to anybody. They're going to think it's, but bonkers and not likely and all this stuff. Yeah, I mean, I get you. So I think we want to see that drop. This, to me, helps solidify that idea a little bit more. And this was a similar region. So I think this is a good setup. Maybe we do get a pop here that goes pretty high and then we drop down. I don't really know. And like I was saying, like there's a potential that it just consolidates and dips low here more gently. It doesn't have to be really, really violent. I'm trying to think if there's anything else I'm missing with. I flip the chart. Sometimes it helps me to see it. Yeah, there's this. This is also evidence right there. This was the forgotten trend. It's the same thing that happened in 2020. So if you want to see the comparison, just scroll the chart back over. There's trajectory information about this. Now, it doesn't ever go that high, but that's where the trajectory information was. It's trying to get back up, while it's going towards that. So again, this would kind of tell you that, again, it didn't fulfill this really steep drop. Could have gone all the way here to like retest that region. Really similar. And then this is sort of the August 22nd of that time where it just kind of melts up afterwards. It's done. But it's a fairly comparable setup. I mean, it looks pretty much exactly the same. So there's this, there's a move out that makes you think it's going to go, and then it fails on the 4 hour, goes the other way and goes to the spring. This is the move out, makes you think it's going to go. If it fails on the 4 hour, this isn't even pointing that low. This one's pointing, isn't pointing towards the top, but it probably could make it do that with this. I'm sure if we use the peak here, like this guy, points towards that top right there. Very obviously. So both of these are like downward bearish trajectories that are currently at play. And then the good news, of course, being that what ends up happening is then it melts up towards this one. And that's the same thing again that happens in 2020. But this one has a lot more severity to it. It's much steeper by comparison, but it's the same thing. You see that similar setup? This is just not as severe. And then eventually it goes to the long-term trajectory. We've been building this thing out for like the greater part of a year, but we also have more information now than we did, 6-7 months ago. So, I mean, there's a lot more data. So as you work through this, it might be a little bit annoyed, like, well, why didn't we do this exactly like this 7 months ago or whatever? Well, didn't have the middle information, completely done. Like, these are things that weren't there. You just don't have them. Now that you have them, you've got them. I mean, you can use them. So, I mean, it's a possibility this thing does go in January up to that high in that $20 area, even as high as like 22. It's going to fill that gap, I think. It could overextend. I wouldn't count on that. But it's there. So this information's, again, this setup is so similar that it's almost like, it's pretty much exactly the same. So the best thing for us would be to go ahead and make that push. We're really building out along here. We want to see it push down. This is upside down chart, and then come back. And ultimately, if it does the same thing, it will be very easy, I think, to follow and track. We're basing this not on a methodology that exists. I can't point you to this methodology elsewhere other than to say I think it's just wave analytics and looking at trajectory and liquidity and like what it is in combination with other things. We can have that conversation another day, but all this follows pretty well. And then if you look at where this ultimately goes, it'd basically be like the same thing as us what happened here, happening here, but to a lesser degree. So this is what I think is fascinating. If you look at where these areas are, and you look at where those middles are, they're basically just like the shifted values. It's almost like if they didn't exist, this would all be higher up on the chart. Like this would be over here somewhere, right? As opposed to down here. But otherwise, the valuations themselves are all pretty much the same. It just looks like the chart got shifted down. Well, in reverse. We're upside down, so whatever. That doesn't make sense. I shouldn't have said it like that. But if you look at the motion, it's the same motion. You might be wondering, and I think about this too, is like, well, what if this is how long it took and this was only 10 months, we've spent more time down here than 10 months. Why wouldn't it go farther, But then I just have to kind of remind myself, like, this was a different setup. And yeah, it goes to like $70. But ultimately, like, the way which this is built out, it's just so much steeper. Like, everything just feels more robust. And if you look at this from the helicopter view, like where we are right now, just looking at it, this isn't exactly bad. You'd be punching below that trend. So, if you were really bullish on this, you might even suggest that this could, I guess you could suggest that this could consolidate and just like keep going. I don't think it's going to, but you could suggest that it goes up to 44. Then it's like a triple move instead. I think it's not impossible. I just don't want to go that far. I'm of the opinion that it's more likely gonna, after this point, like come back to check other levels over time. We'll see. But that's farther out there. But yeah, this makes sense to me. I guess if you were just trying to manufacture a breakout, it's pretty efficient. This like just sets you up above almost exactly like it did before. It's interesting. Not that I would copy and paste it, but if you did, and I'll just show you, it's kind of interesting to think about like this just being up like slightly higher and maybe shorter time period. It's really not that different. Yeah, I'm not so sure about 2026. I still get the feeling it's going to be not great. Tesla's just booking it right now. I guess it's trying to get that gap. It's way up there at 4% up. Google looking kind of bleh. Yeah. I can't really tell what's happening here. It looks like it's starting to distribute. So this was a weakness. And I knew that when it came down, it might be. So there's a potential this drops pretty low. Give me like 5 minutes. All right, just a second. I think this is just coming down to check whatever. Oh, well. Anyways. I don't know. What do you guys think? And we could take this a step further, I guess, and use the triangulated angles as I was trying to get at. And I don't know how effective this will be. That actually looks pretty good. That was really good. That one works really well here. This is kind of weird, though, because I'd have to use... yeah, I don't know. That one's it's kind of strange. I mean, yeah, I guess it follows. That's the angle at which this accumulated, and then the drop zone. It definitely makes me a little nervous about hitting like 470. But we did see that 461 pop up a lot back here. I wonder if it was this arc, which is like right here at 461. That's most curious, isn't it? Why does that look lower though? It's like below the line. If that's the middle, I'm not 1000% sure it is, but if that's the middle, I don't know, it's pretty close, guys. That definitely works very well.